Now, this is a model we haven't looked at in some time. This is the Accumulation Trend Score. And just as a quick reminder of how this works, what we're looking at is over the last 30 days on chain, we're looking at all the different wallets, we're excluding exchanges and miners, and we're basically just looking at, say, over the last 30 days, have entities generally speaking, increased or decreased their holdings. If entities aren't doing anything, they won't show up. If they are distributing coins, and that's, the exchange is kind of this middle ground area where coins go in and then out to somebody else. Purple zones means there was lots of balance growth. Lots and lots of entities are increasing their holdings. Yellow colors are showing the opposite, that there's actually a net distribution pressure that's going on, and obviously it grades between the two. Now, for our particular purposes, it's kind of we're going to focus on the purple zones. There's two areas that really stand out. There's bottoms, where people really step in and actually buy this thing. March 2020, it was over. FTX, it was over. When 3 Arrows blew up, it was over. And yet people still stepped in and actually acquired coins on those dips. These are the kind of things that set market floors. Now, the other time is that people buy the rip. Right, this is looking like a FOMO rally. People are buying at the top here thinking we're going to 150K, and instead we went to 15, right? So these are people who are buying at the peak. 2019 is probably the most relevant to our current scenario. People tend to buy at the tops, the local tops. And as you can see on both of our attempts to get above 31,000, we had a period of large accumulation. Even though we know it's just the hodlers that are left over, that cohort still experiences degrees of FOMO. And we can really see this playing out. Interestingly, people distribute towards the lows, and we get this kind of regime shift over time. Sometimes they're willing to step in and actually buy the lows and put those floors in. Sometimes we move more into this excitement phase where people get a little bit greedy and they overextend themselves as the market moves too far to the upside. But a lot of these mechanics, this is kind of the framework. We're now going to explore this in a lot more detail and particularly focus on the realized profit and loss spectrum, which if you spend any time studying this channel, we spend a lot of time looking at realized profit and loss because it really is. At the end of the day, profit and loss is what drives markets. It's what drives investor decisions. And all of these supply changes are being driven by that, that factor of greed under the surface.